Overnight, the big data release was the minutes from the US Federal Reserve's latest board meeting. Policymakers there continue to paint a fairly bleak outlook for the US economy, which is a concern to us as they're one of the major export destinations for our products. The data out of the States was also fairly bleak. Housing starts and building permits were very, very weak, and we're continuing to hear poor news out of the US auto sector. Really the only good thing that's flowing out of this is that the US dollar is strengthening. It's a counter-cyclical currency, so it's actually been quite strong of late, and the New Zealand dollar is trading around 51 cents US. That's good news for helping make fairly weak global commodity prices look a bit more reasonable in New Zealand dollar terms. On the commodity front, well, we're seeing a bit of a mixed bag really. Gold on the one hand is getting back up towards the $1,000 mark, a very strong demand for gold. That's really a risk aversion play with nervous investors hoarding the precious metal. The other end of the scale, we've got oil prices are amazingly weak, and that's really capturing the weak outlook that investors have got for global growth. Dairy prices, well, they're sitting in the middle, going nowhere at the moment, and that's possibly reflecting the purchasing plans that are being unrolled. The problem I see there is the fact that we're seeing stockpiles start to form, and when those stockpiles need to get cleared sometime down the track, that contributes to price weakness.